but you're talking about where and how Bitcoin gets to $1 million per coin, pure math. Maybe you can break this little short thread down for the listeners and outline how you see Bitcoin becoming a larger part of asset managers' portfolios moving forwards into the future.
One of the things that we haven't really seen is the widespread institutional adoption of Bitcoin as a separate asset class. And I do believe that is going to happen eventually. And so, the numbers in that thread are a little bit different now than they were then, because all of these investment assets are down huge since then. But if you look at stocks and you figure there are about $100 trillion worth of stocks in the world, just look at all the global investment assets. Okay. If you look at stocks, bonds, you got, $100 trillion of stocks, $110 trillion of bonds. You've got 250 to $300 trillion of real estate. You've got 20 to $30 trillion of art and collectibles. You've got about $10 trillion of gold. And you just say that adds up to somewhere about, even if it's just $500 trillion, and then your M2 is over $100 trillion, that's $600 trillion. That's a total of $600 trillion of global investment assets and cash. And so if you just look at the major players, the institutional investors, then you use a conservative 1% to 3% asset allocation, say in the next 10 years, because they realize that this is a separate asset class. This is actually a store of value. Eventually, it is a place that they're going to reallocate some of their portfolio out of stocks, out of bonds, out of real estate, out of gold, into this separate asset class. Well, just 1% of $6 trillion is about $300,000 Bitcoin, and then 2% is 600, and 3% is just about 1 million. So, but the really important thing here, Luke, is how and eventually why that happens, and it's because of the breakdown of that 60-40 portfolio, right? And eventually, these investors are going to realize they need something that's going to be a hedge against long-term M2 expansion. So when that money supply expands so rapidly, and we have all these programs that we're putting money into people's pockets to go spend on assets, well, you're going to need something to hedge against that inflation, right? Not everybody can go out and buy an extra house. Not everybody can, and not everybody wants to be fully invested in stocks. You're not going to want to be invested in bonds because you're not going to get a real rate return on that. You're going to lose money on that, on real rates. The inflation is going to be at or above the interest rate you're going to get on those bonds, and investors are going to realize that. Gold is not. It can be manipulated with paper, and it has been for decades. So it's difficult to hold gold as a physical asset. You can buy coins or whatever, but obviously the easiest, most liquid, hardest, the least, the one that you need the least trust with, you don't have counterparty risk in, is Bitcoin. It settles in just a few minutes, and you can move just about as much as you want pretty cheaply. So they're going to realize that. But the big point here is that, look, you've got five investment firms that control $30 trillion of assets. You've got BlackRock, Vanguard, UBS, Fidelity, and State Street, that they control over $30 trillion of assets. BlackRock's already involved. Fidelity's already involved. And so when those firms, when they come out with products and in their own portfolios that they're investing a portion of their capital in Bitcoin alone, every other firm is going to have to follow. You're just going to have to do it. So that's how powerful that institutional world is. And I do think it does happen. And that's how we get there.
I couldn't agree more. I think the same way you see competitive devaluation amongst fiat currencies to kind of manage their exports geopolitically, you're going to see a very similar kind of competitive allocation to Bitcoin. As when one asset manager allocates to Bitcoin and Bitcoin goes up 200 or 300%, these other guys are going to have to jump on board, and it's just going to be a big domino effect.
That's right. That's right. That's right.
So that's all I've got for you guys today. If you enjoyed that one, slap a like on the video, subscribe to the channel so you're notified when more of these videos come out, and it really does help push this content in front of the eyeballs of more and more people. And if you want to watch the full 1 hour conversation that I had with James, be sure to head on over to my other YouTube channel. That is the Bitcoin Made Simple YouTube channel. It is on screen somewhere around there, and you will be able to see the full interview that I had with James. I'm posting all of my longer form content over on the Bitcoin Made Simple channel, and while you're there, feel free to subscribe to that channel because we're about to hit 1,000 subscribers over there, so I would appreciate all of the help. Again, I hope you guys have a good day. I'll see you all in the next video.